the full probability would be about 92 basis points of cuts. And so you would look at that as an investor and say it's almost 4 cuts that have been baked in. That's what investors are kind of expecting now. So, and it's interesting because that has moved around a little bit. It's been higher than 4 and it's been lower than 3, depending on the time of the year so far in 25.
Very interesting. Very interesting. So no cut next week, most likely. But what do you think the tone of the Fed chair will be during that meeting and press conference? Do you think it'll be dovish, given the some of the economic data that we've seen in their dual mandate, which is also focused on, the labor market?
Yeah, I mean, it's a good question. I think that, quite honestly, I think it's going to be neutral. I think Powell is going to do the very best he can to stay completely neutral. Quantitative easing versus quantitative tightening. And we've been tightening for years now. And even though now we're down to a nominal amount, it's just really just symbolic at this point of selling treasuries into the market, which is not really what they're doing. They're just letting them roll off the books. They're letting them mature and not replacing them is what's really happening. And that's only like $5 billion a month now. It's really just a nominal number. But what would be significant is if they said that they have to stop that and stop on the mortgage market too, because they've got these mortgage-backed securities, MBS, that's on the Fed's books, that coin that would fill a need in this space, because there's not many traditional investors that are in the Bitcoin only space. And there are a few, we know a few at some of, not all of the venture capital funds have this traditional institutional investing experience, but we realize that there are really no hedge funds that do. And so we ultimately decided to structure this fund as a fund that would be focused more on the later stage companies, whether they're pre-public or they're public companies, but they're closer to or from over 100,000 down to 80, the nature of the game. But it's been good because we've had a nice run in our second portfolio, in our second fund here already, and so we're happy about that. We kind of the investors who came in early timed it right, and so they've gotten a nice return already in the first month. So that's kind of where we're at. We're open and we're taking investors now, accredited investors. Not my rule; it's the SEC's. I wish we could change that, but the only difference in this fund, Charles, is that because we are doing the same strategy, it's the same exact strategy as the first fund, and so when we make an investment, we'll just split it up pro rata between the two funds, depending on how much capital they have available. And so we're on a Bitcoin standard, so we don't have any cash in our accounts. I mean, minimal amount of cash just for operating expenses and to fund upcoming privates that we are expecting. So, but other than that, we've got Bitcoin in our treasury. So if we have, so like a typical hedge fund might be sitting on some cash in an environment like this. Well, we're sitting on Bitcoin. Okay, so now Bitcoin though has been volatile in its history, especially around market volatility due to risk off situations. And so being a little bit concerned with that, even though Bitcoin has been acting, a little bit differently than your typical tech stocks recently, we still believe that ultimately it is not quite decoupled from risk and to monetize it, right? And so that's a unique. And I'm looking over here at kind of the different mix of companies that are doing these kinds of things, but what's unique about strategy for your listeners, and this is really important, is that, and this is what separates MicroStrategy from every other company out there, even the new 21 so far, Semler Scientific and some of the other ones. This is what, and nothing against those. This is just different, and MicroStrategy is light years ahead for one reason. That reason is that Michael and his financial, because those converts are now tied to a volatile stock. They're convertible into MicroStrategy Common, which is now volatile, matching the volatility of Bitcoin. Well, you realize that, well, gosh, every time I sell a convert, my stock gets, and I turn around and buy Bitcoin, my stock gets more volatile. That's closely tied to Bitcoin. And then, and the traders that typically buy these things are hedge funds, and they love the volatility, especially in a rising asset, because it gives them the upside optionality of the stock. So if the stock runs, say 40, 50, 100%, well, their convert is likely to be in the money, and they can convert and get stock and make a whole bunch of money they were not going to make otherwise, because it's way above par.
The market cap was somewhere around $1 billion or even less when they started 4 years ago, and to think we're still in the early days of even just or trying to even understand all of what's going on here. So very interesting. Well, wanted to move to our first principle section. It's essentially where I'll ask you a few questions about specific ideas, and I'd like you to break them down from the ground up. I want you to essentially reason through or prove your thoughts step by step. So starting off with our first one here, how do you decide which Bitcoin treasury companies are the best to own in the space? There are various ways to analyze them: Bitcoin per share growth, MNAV, strength of the management team. How do you and your team personally tackle the valuation process?
Yeah, it's a great question. Love that strategy. Yeah, we do. We think it's a very interesting strategy. And for this one, it's just a question of, where do you want to buy it? You want to buy it more closer to 2.5 to 3.5x, or are you willing to pay this rich multiple? And it really depends on your mix of these companies and where you see that fits in. But going back to MicroStrategy, what's important about that, and your first principles here, is what do we ultimately believe that multiple should be for this company, right? So if it trades up to a 2.5, 3x, well, I think that Michael Saylor would have well over a year ago, and it's been kind of bumping around with no real momentum. But then Trump was elected, and suddenly he starts a strategic Bitcoin reserve for the U.S. government. They basically announced that it's happening, and once the announcement went through of what he did, there was a lot of disappointment. There was speculation that he was going to just do an end zone run around legislation and just go and do an executive order to go buy Bitcoin through some different ways that they could do it, but he didn't. What he did was he said, we will hold the Bitcoin that we have on our balance sheet from seizures, from fraudulent or illicit activities, and we won't sell that. Enough future cash flows, and you're in the United States Treasury. What do? Well, you just print more money, and you buy back bonds in the market to free up capital, so people can turn around and buy the bonds that you're floating. And so you're diluting your capital base. You're basically saying that your dollar is worth less than it was when I issued these bonds. So it's going to be worth less in the future. And so when I turn around and pay you back, you're going to have dollars that are worth less than they were before. On the flip side, if you have something like Bitcoin and you have these, and it's secured by this underlying asset that's rising, well, you may be able to get an advantageous interest rate on there. You may be able to, what is concerning is that the valuations of stocks have gotten way ahead of themselves versus, just the gross domestic product, the GDP of the country. And now the GDP has been revised down. So the valuation of the stocks they've gotten way ahead of themselves. And so that's a concern. The only way that they can stay at these valuations is if they print more money. A more likely scenario is that we have some sort of event, whether it's a credit event or some sort of black swan that we're not expecting, Charles, that causes another steep drawdown in the market, and ultimately a problem in the treasuries, and a lockup in the treasury market that could be driven.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.